Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, August 11th, 5:34 p.m. Eastern Time, coming to you from the financial capital of the South. That, of course, is St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we continue to be in an uptrend. Check the trend gauge in the upper right. Market leaders marked in grow mode, plentiful and acting well. Short term, we've got the S&P 500 and the NASDAQ 100 above the 21-day moving average. Other indexes struggling there, so we're on neutral with the green sub arrow. All indexes remain above the medium term 50-day moving average and long term 200-day moving average. So what happened today? Kind of muted overnight action and mild open and tight action. Tried to break out around noontime up above the 6,400 level. That had been acting as resistance. That breakout failed. We had a minor trend down, lower lows, lower highs for the next 4 hours into the close. So weak afternoon, leaders fine, crypto strong. Let's get into the numbers. Our 21 over 21 list down an average of 0.25%. 7 up, 1 neutral, 13 down. Turbo12, big changes to this. We got 7 new names out of the 12 new names, down an average of 0.20%. But a ticker that was bought by Turbo last week had a very strong follow-up today, SOUN, up 17%. The big eight up an average of 0.12%, led by Tesla, which was up 2.9%. The RGA, this our eight growth ETF composite, down slightly, 0.16%. S&P 500 down 0.25%. Equal weight down about the same. NASDAQ 100 down 1/3%. Equal weight down about twice as much. Dow negative, mid caps negative, Russell 2000 negative, but only by 0.1%. Global 60/40 down 0.15%. Flagship GROTECTION portfolio down 0.16%. Turbo on the back of that, Soundhound and crypto strength up 0.64%. We'll take a look at those charts momentarily. Reminder, please, are on YouTube, please like, share, and subscribe. Helps the algo get our content out into the streams of people that are looking for investment help. So we would appreciate that. Let's start with the S&P 500. Let's go to a 30-minute chart here, and I can draw a line, and it's pretty clear what we're seeing here, the 6,400 level. So back on July 29th, gapped above it at the open, failed. 2 days later, gapped above it at the open, failed. Last week, couldn't quite challenge it. And then midday today, cleared that 6,400 level and promptly failed immediately. So that's really the level that we'll be keeping our eye on. The next close, at least 2 closes above the 6,400 level, is what the bulls would want to see. On the other hand, 6,360, that acted as a support/resistance level over the past couple of weeks. That's a level we'll keep our eye on to the downside. That is going to be that 6,360 level is still above the 8-day moving average. You know, I always say if you're above the 8-day moving average in either the indexes or an individual position that you own, you cannot complain. That's a normal area of cracking strength as holdings move higher. And then below that, we've got the 21-day moving average, 1% below today's close, and 3% lower is the 50-day moving average. So continuing to trend nicely, 6 days up after this shakeout below the 21-day moving average. Not exactly 6 days up, but 6 days of higher highs as we regained the 21-day moving average last Monday, the 4th. Let's look to the strongest index now. That's the NASDAQ 100, and 6 days of higher highs there as well, above the 8-day moving average, 6 days above The 21-day moving average, that's the green line. Equal weight S&P 500, however, is lagging. This is a bit of a concern. We really want to get this, instead of being a 6-day uptrend, it's a 6-day sideways trend with terrible relative strength. Definitely something to keep an eye on. Uh, Trapped between the declining 21-day moving average and the rising 50-day moving average. One of these levels will win probably this week, and we'll see if it's going to be the bulls to the upside above the 21 or the bears to the downside, and then we'll see how that trickles over to the NASDAQ 100 and the S&P 500. Let's look quickly at equal weight NASDAQ 100. That's also looking bad. In fact, it broke the 50-day moving average today. And if you've been following us, you know why. It's because software has been extremely weak. This is cybersecurity, cloud software, even the enterprise software names. And the conventional wisdom is that AI is taking over a lot of the functions that these software packages were performing. And why pay for software if you've got an AI agent that can do the job for substantially less and do it quicker? So break of the 50-day moving average, not good there for the equal weight NASDAQ. We do not include this in the 6 indexes that we track, however, but we do make note of it from time to time. Let's go to the Dow Jones Industrial Average, last of the big cap indexes. That also cannot clear the 21-day moving average, and we've got the 50-day moving average below it. Mid caps, this often looks a lot like the equal cap weighted S&P 500. Slate closed just below the 50-day moving average, has not been able to get above the declining 21-day moving average. Relative strength has been terrible there as well. Russell 2000 sitting basically right on the 21-day moving average for about 5 straight closes now. We going to be able to power above this level, or is that going to fail and we'll test the 50-day moving average? We should know within a couple of days how that's going. So those are the major indexes. Let's look at uh, these software ETFs very quickly. There's IGV. This is the big one. Microsoft is the big weight in it. We'll look at Microsoft very quickly. That looks great. Gapped up on earnings. No follow through strength since then. Been pulling back, but sitting on the 8 EMA and above the 21 EMA. But here's IGV, the big cap, broke the 50-day moving average today. My preferred cybersecurity ETF is CIBR, below the moving averages, and CLOU, preferred cloud computing index, looks terrible. You can see that breaking down. We also use WCLD to track it. That has a similar look about it, but software being sold with two hands by the market. And that is bleeding over to XLK weakness. But because of the big weights of the Big Mag 7 type names, it hasn't impacted the XLK chart yet, although you can see it did not make a fire high the way the Qs did. Okay, let's go to inter-asset correlation. We'll start with the VIX, and the VIX was up on the day while the indexes were down. Not a surprise for it to rally in the afternoon while the indexes were pulling back, but still below the 21 and with a 16 handle, and we're fine with that. US dollar is consolidating. So basically flat today. Precious metals did not have a good day. Silver gapped down and closed below the 21-day moving average. That's down 2%. Gold, after some strength last week, sitting right on the 21 and 50-day moving average, down 1.44%. Gold stocks have been leading gold. They pulled back but bounced right at the 8 EMA and closed at the top of the range. So the stocks themselves acting better than the metal. Bitcoin, gap up, closed near the bottom of the range, didn't make a new high relative to 4 weeks ago, but still up 2.3%. The strongest, however, is ETHA, Ethereum ETF, closed a little below mid-range, but you see multiple gaps there. Thursday, Friday, and today up 4.7%. We do not want to see an evening star pattern, which would be a reversal tomorrow and a close back into Friday's candle. So that's something to keep an eye on. On to bonds. Not a lot of action in bonds today. I'm not even going to show the charts. Tight trading on BND and TLT. So no real change in rates. Let's go on to the tail of the tape. Stochastics mixed. That falls in line with the chart mixture as well that we indicated. NASI to the downside. We need some breadth to turn that up, and that could, it's in a spot where we've rallied from. Let's just say that. Percent of stocks against the 5-day, neutral at 42. Some news. CPI potentially moving the market Tuesday morning before the open. Then PPI, that one's the consumer price index, one's the producer price index. CPI Tuesday, PPI Thursday. Keys. S&P stays above the 8 and the 21, but not at an all-time high. We're going to change this tomorrow to look at that 6,400 level where we're consistently failing. NASDAQ 100 above the 8 and 21, not an all-time high. Russell basically sitting right on the 21 and above the 50-day moving average. Day count from up one to down one, 4 days above the 80 MA, 21 days above the 6 days above the 21-day moving average, and actually 74 of the last 75 sessions. Short-term expectations remain positive as long as we remain above the 21-day moving average on the S&P and the NASDAQ 100. Average true range on the S&P is nice at 0.86. As far as sectors go today, new one we haven't talked about in a while. This is the marijuana ETF, MSOS, as there's a lot of talk out of DC about trying to lighten the restrictions on marijuana, take it off that Schedule 1, Class 1 drug. XLC and XLY strong, retail strong. To the downside, as we mentioned, gold and silver stocks, software again. That leaked over to XLK, which was negative, and ITB, which is the home builders. No changes to the GROTECTION portfolio, just some stops raised. Volatility adjusted beta 1.42 for a comparison. A full S&P 500 portfolio is a 1.00, so 42% more exposure to the market than a full S&P 500 portfolio. Balance at risk 6.06. Two changes to the Turbo portfolio. Bull, we'll take a look at this chart, and XXRP, that's Ripple, raising the volatility adjusted beta to 2.12, 6.20 balance at risk. Name another advisor that can tell you how much your portfolio will pull back before you're completely out of the market. I don't think there's another one out there. Bottom line on the day, S&P failed to break out above 6,400. Leaders were mixed. Crypto was strong. Nothing to be overly concerned about, but if we see more weakness breaking the 8 and the 21, then we'll start to get concerned. Keys for Tuesday, S&P looking at that 821 and to the upside, the 6,400 level. NASDAQ 100, 821 and 575 is kind of the equivalent of that 6,400 level, which we can't conquer on the NASDAQ 100. Russell 2000, watch it against the 21, which is where we're sitting, and above the 50-day moving average. Let's get to some charts, and we'll start off with let's go with the Turbo12. And we got 7 new names in here. We've got them sorted by, let's have them sort by, so these first 7 will be the new names. Webull, that's a strange looking chart, isn't it? Well, digital investment platform, huge move up in April. It's pulled back since then. It's consolidating tightly on the 21-day moving average. XRPI, this is Ripple, had a big move up on Friday, pulled back today. SoundHound, Ted and Connor bought this in Turbo on the gap up on Friday. Big follow through to the upside today, also on huge volume. So looking great there since it cleared that 14 level. METC, this is a whole name, but it's also rare earth metals as well, and up 3 straight days on that level, and looking great near recent highs. IREN back on the chart, negative reversal, but still above the 8 EMA. Oklo reported earnings today. It's basically flat. They have zero revenues, and they reported again zero revenues. So this is still just a pie in the sky uh, nuclear energy play, but no revenues sitting on the 21-day moving average. And Rigetti is the last one of the new ones. This is a quantum stock, nice tight consolidation above the 21-day moving average there. Carryovers, KTOS, nice earnings move on Friday, higher high today and a higher closing high. Galaxy Digital, negative reversal at that 30 level. Hinge Health, 4 days down after a big move up on earnings. Sanmina consolidating near recent highs, riding the 8 EMA higher since a big earnings move a week and a half ago. And American Superconductor pulling back since a big earnings move a week and a half ago as well. So that's your Turbo 12. Let's go to the 21 over 21 list. Just one new name here. First six names are what we own in the portfolio. Palantir, mild pullback after 4 days up after earnings. GEV sitting right on the 8 EMA. Hood pullback after two strong up days and a shakeout after earnings. NVIDIA continues to ride the 8 EMA higher, 3 weeks away from earnings. 2 weeks away, actually. MP Materials cleared that 80 level. The extreme strength this morning was on that rare something on rare earths. No, it's actually a lithium mine in China closed that sparked all of the lithium that trickled over to MP. But that wasn't a huge impact on them, and it reversed after that, but still looking great since its earnings report. And Reddit continuing to just make higher highs since its earnings report. So those are the first six that we own. The next 14 have been on here for multiple weeks. They continue to act well. And this is a sign of strength in leaders. When these start breaking the 21, that'll be the feedback we need to pull back. But for now, we're just riding the wave. CRDO looking great, higher highs. AMD holding the 8 EMA, nice recovery after an earnings shakeout. SoFi recovering nicely after a secondary the day after it gapped up on earnings. APH riding the 8 EMA higher. ANET consolidating after an earnings gap last week. AppLovin continuing to make higher highs after an earnings shakeout last week. Dash pulling back after being higher on earnings last week. A-Lab just continues to hold up and show strength after its earnings report. GDX bounced at the 8 EMA. Rocket sitting on the 8 EMA, mild low volume pullback since its earnings report a week and a half ago. Carvana, not much strength, just a hair below the 21-day, but right above the 50-day. It's time for it to the bulls to show up or the bears to take it below the 50-day. So we're keeping a close eye on this. Net Cloudflare earnings volatility, higher highs after that, pulled back to the 21. Vistra sitting on the 21 after some earnings volatility on Thursday. Seagate undercut the 21 last week, regained it on Friday. Higher high today before reversing along with the market. And the one new entry is Micron. Uh, they Somebody knew on Friday that they were going to raise their sales today, which they did. Look at out of the blue volume regaining the 50-day moving average on Friday. Higher volume today as they did in fact raise their estimates. This is just a month, about 6 weeks after reporting earnings. So it's in the right side of the base there. Let's see. We've got alert set above today's high, below today's low. That's the market deciding whether or not it got excited after the initial report and will push it higher, or if it's just factored in and overall market weakness will pull it below today's low. So those are the two levels that we're monitoring. Bracket alerts, we do it, make frequent use of that. And that's it for today. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. The phones have been ringing off the hook since we announced our intention to close the existing GROTECTION portfolio to new investors when we hit the $400 million mark, which the way money's coming in and the returns that we've had could be just a matter of weeks. So if you've been thinking about bringing assets over, the returns we have for GROTECTION are fantastic. In fact, you will not find a diversified mutual fund with a better risk reward in the universe. If you find one, send me the ticker. I'll explain to you why we're beating it with more upside and less downside. And that's what our portfolios are designed to do. Flagship GROTECTION and more aggressive TURBO-TECTION grow assets during uptrends, get out of the way during downtrends. We are technicians here. We know how to read the market, and we detail this on video every night. And with that, I will wrap it for Monday, August 11th. This is Don Vandenbord with Revere Asset Management, telling it like it is. It's not how much you make in the market, it's how much you can keep. Thanks for listening, and have a great day.